Welcome to the CFA Level 0 program. My name is Allen Aravindar and I'm a CFA Charter holder. This program of CFA Level 0 has been brought to you by IMS Proschool. Let me just get you a brief on why exactly we are doing CFA Level 0 at the first place. Now, it happens with everyone. We hear about a qualification like CFA from our friends and families and colleagues, and we really know in detail exactly what this qualification does or how will this qualification help you in your career or which career for that matter. So we tend to attend seminars, we tend to go through a lot of videos, but what we miss out on those seminars is the details of the subjects which are covered, and in the process what happens is the student is not able to figure out what kind of detailing in the subject is there. Also, there are concerns as to whether the CFA program is right for you. Some of them will compare it to an MBA program, some of them to even a program like Chartered Accountancy. Also, some of the other concerns is whether investment is what you're looking at as a career, right? People don't really understand what the investment career means, majorly because they've the kind of knowledge that they've heard is pretty shallow, and hence they tend to take the wrong program for their choice. Also, the subjects are discussed in this entire video, so we'll be going through some basic topics which will help you to understand whether your aptitude for the specific subject is enough, right? Also, at the end we would be doing an assessment, a kind of a test which will prove to you if in such a short video you are able to understand the concepts or not. If you are able to clear the test, then it's a go ahead. You can go ahead and register for the program and be confident that you have the aptitude to clear. It really does not mean that it does not require any preparation. What this entire test means is that from an aptitude perspective, from an understanding perspective, you really do not have any issue, and hence you can register for the program or go ahead and take some training from whichever service provider is giving you the required coaching for this. So let's get started. This is the basic syllabus of CFA. There are close to 10 subjects, out of which we are leaving 3 subjects, which are basically ethics, portfolio management, and corporate finance. The reason for leaving this is because most of the focus is towards these heavy subjects like quant, equity, fixed income, and financial reporting analysis, and hence it is not obviously possible to cover all the subjects, but mostly the most important ones we have tried to cover in this entire video, right? And as we go through the various subjects, I would be telling you also that what are the weightages and what is the kind of preparation which is required for that specific subject. So let's get started with financial reporting analysis. For level 1, this has around close to 24% weightage. Now you may know that there are 240 questions in your CFA level 1 exam, right? So 240 are basically divided into 120 in the morning and 120 in the afternoon session. So they basically call it as AM session and PM session. So 240 questions, out of that 24% is the weightage, so it's almost close to 48 questions in total coming for financial reporting analysis. And that's where basically students find it difficult, specifically when they are coming from a non-finance background and they're really anxious about the fact of whether they will be able to understand accounting as a concept or not. So let's get started and try to discover what exactly is financial reporting analysis as a subject. So we all have a CV, right? We also have a biodata when in case we're getting trying to upload our profile into a matrimonial site, right? In the same way, right, we have financial statements for companies. Now, let's understand the analogy here. So what we basically mean by that. So in case of a CV, what I'm trying to prove to an employer, when you're trying to get a job, you're trying to tell the employer that this is how I performed in the past, right? And I am expected to perform better in the future, and hence hire me. In the same way, if you go to a matrimonial site, you're basically confirming to the person who's trying to look for maybe a partner that you are trustable and you would be able to take care of the other person, right? Based on what you do and what are your goals in life and what are your habits, right? So basically trying to prove a point that this is how I've been doing till date. In the same way, financial statements, so companies have to present themselves as to how they have been performing till date, right? So you basically can go to any of the public listed companies and you can check their annual reports. For example, you can go and check Indigo's, which is basically called Interglobe, the airlines. You can go and check their financial statements and try to see how they've been performing for a specific year. So let's take an example to prove the same point. In the case of we're trying to make up a story here, right? So we have Abhishek Jain here, right? So Abhishek is a 45-year-old, very enthusiastic and always dreamt of starting a coffee shop of his own. However, he does not understand finance and understands it while doing business. So let's explore Abhishek's journey, right? So let's first understand the philosophy of financial statements, right? So we're not going to get into a real detail as of now. That we'll be doing it in the later slides. But let's get an idea out of what these financial statements, why it is called statements, right? So there might be more than one statement, right? So we have three statements here: profit and loss account, cash flow statement, and balance sheet, right? So as the name suggests, profit and loss account is basically trying to tell you how much profit did you make by selling your goods or maybe serving coffee, right? And whether you made loss in the entire process, right? So the basic philosophy stands as revenue minus expenses is equal to profit, which basically means that if I was able to sell 2 cups of coffee, right, for 500, so that's my revenue, right? In the same way, if let's say for making this coffee I had an expense of 250, so that's my expense, this is my revenue, and if I deduct this, so that's my profit. So that's the basic philosophy, plain and simple, right? Now cash flow statement tries to measure that, okay, you said that you sold 500 rupees worth of coffee, right? But did you get that much cash? There might arise a situation, right? So try not to get confused here, but I'm going to make it very clear. So I'm saying that let's say this customer has come to your coffee shop. He had 2 cups of coffee, but then he said that I'll pay you 250 since I'm running out of money, right? And the remaining 250 I'll take it on credit. So now what happens, right? So the income statement will show 500 as revenue, but in reality 250 is what the cash I have received. Now why did I book 500 worth of revenue? Because of the philosophy of accrual system, right? So what the entire accrual or the entire statements philosophy says is that revenue needs to be booked when it's earned. So in this case, you've already delivered the coffee. So coffee has entered the customer's body and he has consumed it, right? So hence now you don't have any control on the coffee. So obviously you can't get the coffee out of him, right? Just because he only has 250 rupees. So now you have lost control over the coffee, and hence the revenue has been earned. Whether or not cash has been received is a different thing, right? So that's the cash flow statement tells you that okay, you have got 250 as cash and 250 as a credit. So your cash flow statement says that okay, only 250 has been received as cash. Now where does the remaining 250 get reflected? So this gets reflected in the balance sheet, right? So the credit of 250 is shown as an asset in the balance sheet. So balance sheet basically tells you your position at a point in time, right? So let's say I'm saying that this is first month of operation, and let's say I'm saying that at the end of the month the balance sheet will tell me how many people I owe money or how many people owe me money, right? So these basic three statements, profit and loss account, cash flow statement which measures the cash, and balance sheet tells you how many people you owe money, what are your assets, how much cash do you have in your bank account. All that is there to tell you your position at a current point in time. So let's get into a little bit of details by exploring a story, right? So let's say the coffee shop which he decided to start off needed 1 CR of investment, right? So he had fortunately saved 1 CR after working for 15 years in the hospital sector, and that's where the passion came from. So let's see how the entire year went by. So 500 customers came to Richie's Coffee per month. Each customer spent around 300 rupees on an average. Average customer cost, right, that is the per customer cost, was 100 rupees. So can we make this calculation? If 500 customers are coming to Richie's Coffee per month, so I multiply 500 into 12, which is 12 months, and average spent is 300 rupees. So that's close to around 18 lakhs, right? Similarly, cost is 100, that is the average cost per customer, into 12 into 500 customers, that's around 6 lakhs. That's total cost. So I have the revenue. As per my philosophy, it is revenue cost. So I have the cost. Also I have a rent cost, which are my indirect costs of 6 lakhs. So my profit is left with 6 lakhs, right? So that's how income statement looks like. So you have revenue, you have cost, and you have profit. So in order to put it in a format, so this is how it will look, right? So you have 18 lakhs. Your direct cost was, you can just check it out, the direct cost was 6 lakhs. And your rent was 6 lakhs. So your profit will be revenue minus cost. So profit of 6 lakhs. Right. Moving on. The accrual system, right? So the revenue when earned, so I had briefly explained you this at the beginning. The revenue when earned and expense when incurred, right? In that case, when I said that 500 worth of coffee was already served and you had lost control on that, right? So revenue was earned as soon as I lost control of the product, right, which is the coffee. Also, the expense is incurred, is booked when incurred. So in that case, excuse me, expense when incurred. So that happened when the coffee was already served and the expense to make it was already incurred, and hence the 250 rupees cost was incurred. So in this case, 500 customers had come to Richie's Coffee per month. Each customer spent around 300 rupees, which we already know, and average cost per customer was 100. So now there's a little bit of twist. Out of this 18 lakhs that we earned, right? So we had earned 18 lakhs as revenue. But understand, this is not cash, right? So out of this, 30% to credit. That means 30% did not pay cash. That is almost close to around 5.4 lakhs, right? So also out of the expense, right? So our expense was around 6 lakhs. So out of this expense, 20%, which is 1.2 lakhs, we did not pay in cash, right? So in this case, here is a situation where people owe me money. Here is a situation where I owe people money, right? So in cases where people owe me money, it's called an asset. In cases where I owe money, it's called a liability. As we discussed, this is something. These are two things which will be booked in the balance sheet. Right? So as we were discussing, we can build on that. So in this case, the receivables 5.4 lakhs which people owe me is shown as an asset, right? In case of the 1.2 lakhs which I need to pay to people, right, my suppliers, is a liability. I have also invested 1 CR as an investment in the business, so that's my equity, and hence the equation assets is equal to liability plus equity, right? So now obviously the question arises is that why is this equation like this? Assets is equal to equity plus liability. So let's try to see why this balance sheet is called a balance sheet, because it needs to. So now let's try to see how this entire format of balance sheet actually works. And the basic format is assets, liabilities, and equity on the downside. So assets is equal to liability plus equity. So this total and this total should basically match, right? So let's get started with each and every transaction. So Abhishek basically started with 1 crore of investment, so that should be reflected in the equity side. So 10, 100, 1000 crore, right? So that's the investment. So what should be the counter entry for this? Obviously an asset, because cash is received in the bank, right? And I will also keep the sum function on so that we are able to continuously monitor that the balance sheet is matching, right? Now the second transaction that happened is that we made some money in the profit and loss account, 18 lakhs of profit. But did we receive the entire money in cash? No. So the counter entry should be 1800,000 minus 5,40,000. So this is the amount of money that we actually received in cash, right? So obviously the balance sheet does not match, because in the right case we increased it by 18 lakhs. So according to the profit and loss account statement, we are supposed to book the revenue when it's earned. So it rightfully requires 18, shows as 18 lakhs. But the cash side basically does not increase by that amount. So it has to be reflected in accounts receivable, right? Now the next transaction that happened is 600,000 as cost. But did the entire money get deducted in cash? No. So only 4,80,000 in cash. The remaining was shown as accounts payable, because we owe them money, right? The next transaction that happened was your rent. So 600,000 as your rent expense. This we ended up paying the entire as cash. Right, so there you go. So we have taken care of almost all the transaction, and now at the end the balance sheet matches, right? So Abhishek's equity has basically increased from 1 crore to 1 crore 6 lakhs. Right, now let's see how much cash was received. So now we took care of the balance sheet, we took care of the income statement. Now let's take care of the cash flow statement. Now the cash flow statement has basically three activities. So you classify the business into three main activities: operating, investing, and financing, right? So from the operating side of the business, what is the main business of Abhishek? It's making coffee, right? So what we need to find out is, from the profit and loss account, net income is there, right? So we need to find out of this net income how much cash was actually received. So if you clearly see in our previous slides, what was the profit that was made? 6 lakhs. So let's put in that 6 lakhs here, right? So let's put in our 6 lakhs here, 600,000. Now let's see the change in accounts receivable in the balance sheet. So if you remember from the balance sheet, right, your accounts receivable has gone from 0 to 5,40,000, which basically means that this 5,40,000 you did not receive in cash. So that's a negative cash outflow. So what we're going to do is, we're going to reduce this by minus 5,40,000, right? Similarly, we did not pay that 1,20,000 in cash. So that's a positive thing for the business. So we're going to take it as a positive of 1,20,000. So net cash from operations is, let me sum it up, is 1,80,000. So that's the actual cash gone and out of the business, right? It's 1,80,000 from operating activities. Investing activity is 0, right? So this is going to be 0 as well. Also, what is the financing activity? So financing activity is basically raising money or taking loan or paying off loan. So in this case, we did not take any loan, but we did raise equity. So 100,000 crore. So net is the sum. Now the total change in cash will be 1 financing activity plus investing activity plus operating activity. So that's the total change in cash. So if you see in your balance sheet, that's what the cash portion shows: 1 crore 18 lakhs, right? The same thing is shown here. So that's how the cash flow statement basically works. So at the end of the year, you know three things: your equity position has increased from 1 crore to 1 crore 6. Your cash has increased by 1.8, right, which basically means that entire profit that you actually made in cash is 1.8. And performance, which is the net profit, theoretically not in cash but in terms of actually generating the revenue, was 6 lakhs, right? So it's important for the perspective of a company. When you're trying to analyze it, you have to understand the position of the company, the performance of the company, and actually the cash generated in the business, right? So that's the income statement, balance sheet, and cash flow. So that's what basically financial statements are for, right? And it's that simple. And this is again built up into some more nitty-gritties of the various statements in the CFA level 1 syllabus. So they get into the nitty-gritties of income statement, the balance sheet, and the cash flow statement. But from the perspective of understanding, it's pretty simple. So this is basically financial reporting mechanics is what we have tried to understand.